Shout out to everybody here. My name is Samuel James Price, and every single day I go over the news, and we talk about things that are affecting the markets. If there's a hack, what's going on? Like today, U.S. had a hack. We went over that news, kind of breaking it down, and there's just a lot going on. U.S. Energy Department and other agencies hitting a global hacking spree. There was also a group on Twitter that was saying a hack was coming just yesterday and the day before. Coincidence? Same people? Something could tell us, and it was the Department of Energy has been hit a few different states, and this could get deeper. We'll find out where this goes and find out more information as the day continues. Frax Finance to launch Ethereum Layer 2 named Frax Chain. All right, stablecoin project Frax Finance plans to roll out its blockchain named Frax Chain. Frax Chain is designed as a Layer 2 rollup, deriving its security from the Ether mainnet. The team behind Frax Finance, known for creating the Frax stablecoin, has unveiled its strategy to introduce a Layer 2. The network is expected to be ready by the end of the year. Frax Chain's governance will be led by the holders of Frax shares, tokens, FXS. The network will employ the use of Frax stablecoin and the Frax Ether, Frax liquid staking derivative, for transaction fees. Furthermore, fees generated by the rollup network could be partly burned or redirected back to the Ethereum mainnet to be distributed among stakers of the FX governance token. Pretty awesome. Frax Chain will incorporate decentralized sequences. Those sequences are specialized nodes responsible for ordering transactions into batches in a rollup network. They will be operated by an entity chosen via a governance vote. This feature, according to Kezmian, will differentiate Frax Chain from other Layer 2 solutions on Ethereum, which typically depend on a single sequencer. Frax Chain proposes a solution where sequencer roles can be auctioned off and rotated, creating a decentralized sequencer base. If a sequencer is forced to shut down, Frax Chain would allow the next elected sequencer to pick up from where the previous one left off. That's interesting. So it has a little bit of a one-up on the other ones. Pretty cool too. Lido DAO proposes new onboarding round for Ethereum node operators. And Lido keep coming at you. They continue to develop. Definitely would keep Lido DAO on the radar, liquid staking, and continuing to move. So that's pretty cool too. QuickNode and Chainlink's labs to offer Web3 resources across 20 chains. Chainlink continue to build. Remember, Chainlink is behind the scenes and does a lot of interesting stuff. And I believe Chainlink will come back and make a pretty big move. Will it 50x? I don't believe so, but could it 30x and 20x? There's a chance. Back delist Solana, Polygon, and Cardano amid regulatory uncertainty. Wow, that's pretty crazy. They'd even backed. Everyone's jumping on. They don't want to deal with the nonsense. They don't want to deal with it. Maybe that's the main reason they went after those coins, because they were going after the other people that were holding them. Central banks successfully test over 30 CBDC use cases, including offline payments. An API layer could facilitate a wide range of central bank digital currency payment scenarios. A Bank for the International Settlements and Bank of England experiment has shown. A joint experiment by central banks has tested ways to connect monetary authorities and the private sector to facilitate retail digital currency payments, according to a new report. The experiment saw London Innovation Hub of the Bank for International Settlements, which groups the world's central banks, and the Bank of England developed 33 application programming interface, API functionalities, right, an API application programming interface, to test more than 30 central banks' digital currencies, use cases including offline payments. Project Rosalind looked at how API layer could support a retail CBDC and facilitate safe and secure payments through different use cases. The Bank of England is currently consulting on a digital pound, which it is said will likely be needed in the future. The bank said out of its consultation that it would host the centralized ledger and the application programming interface for a potential digital pound. So CBDCs, I'm concerned about them. I think if you look across the range of experiments that we have done in the Innovation Hub, increasingly in the CBDC space, whether it's wholesale or retail, we're experimenting and exploring different dimensions, such as cross-border, offline security. If they think they're all very important elements of CBDC. So before it was like more institutional background stuff, we can move money, but now they want to get it in the hands of the retail and that people know that they can use it. They're going to try to probably buddy it up to a regular fiat at the same time. Like you're going to have access to fiat, and then they're going to slowly take control until next thing you know, it's only CBDC. We know that CBDCs aren't for the people. We know they're going to be a centralized entity that could shut your money off. They're going to claim yes, no, and all this other stuff. But we know at the end of the day, from what we saw with the truckers up in Canada, that if they want to squeeze you, they will squeeze you. And if you give them more control, it's just going to be worse. So definitely concerned over CBDCs. I do not believe they're the way. Bitcoin is the answer. Crypto traders flock to OTC markets as exchange liquidity dries up amid regulatory clampdown. Over-the-counter demand is at the rise as it spread and remained tight across OTC desks. Crypto traders are turning to over-the-counter markets to source elusive liquidity following a regulatory crackdown that has resulted in substantial decrease in market depth on centralized exchanges. OTC demand has been steadily on the rise since the collapse of FTX in November, with subsequent spikes being attributed to the collapse of several crypto lenders last year, and more recently, the SEC's decision to sue Binance, according to Zahreddin Taoug, head of the trading at Paris-based market firm Wharton. The catalyst for this demand has been sharp drop in the market depth across exchanges. Market depth is a metric that measures liquidity by assessing how much capital would be required to move an asset in either direction, typically measured at a spread of 2%. Last month, Jane Street and Jump, two prominent market makers, announced that they were at the very least reducing their trading activity. This compounded the liquidity woes that have been felt since FTX's collapse, with market depth on exchanges sliding more than 50% between November and May. And this week has emerged the market depth on Binance US. Yeah, they lost 76%. They went after them. They also took away their fiat bridge. That's what's going to happen. I expect this type of news during a bear market. I expect this type of news while Bitcoin's getting, going up and down. They're attempting to kick our teeth in. Stay strong. This is what we see. Months from now, we'll look back on the halving and we will laugh, as no other asset has a halving like Bitcoin. No other asset has the security of Bitcoin. No other asset can hold as much money as it can without getting hacked as Bitcoin. Bitcoin has been secure, has been strong, and shown to be one of the greatest assets in the world. So MicroStrategy said it best. Since they got into March of 2020, MicroStrategy stock is just continuing to go up compared to the S&P, compared to any other investment. They've outpaced broader markets. So Bitcoin also, you have to remember, was 1 penny, less than a penny at one point, and now it's way, way more. The fact that Bitcoin is continuing to rip to the upside tells you that it's just better than the dollar in the long run over time. So, and again, everyone, that is the news. And we're going to keep this hack kind of news coming at you too. This is kind of really, something to be concerned about for sure. Was it an inside job to create overall cybersecurity sanctions on everybody? Or was it a real deal hack from a hacking company? I always wonder, and we'll see if maybe they said they come out and claim it, but to me, it's either here or there. I also don't trust everything that comes out of the news. So shout out to everyone for watching the news. Thank you so much for jumping on in, and I appreciate it more than you would ever know.